So you've been instrumental in funding over $2 billion in property finance transaction. Can you walk us through a particularly challenging deal you've encountered and how you've navigated through it successfully?
Yeah, look, I have to say every deal in private debt lending has its own challenges because typically if it was a vanilla transaction, you would go to the major banks to fund that because that's their bread and butter. So ultimately, most deals have some challenges which you need to understand to be able to mitigate, and it's really that competitive tension between risk and return, and really diving deeper into project risk to understand what are the critical risks, and how you get comfortable with assumptions that are being presented that allow you to navigate these situations successfully. And so what I'd say is in private banking land versus a major big four bank, for example, in my experience, there's an even higher rigor of credit assessment because with a bank, you can provision for bad debt, whereas in a private bank, typically having a loss is just not acceptable. And so there's a much higher degree of credit assessment to understand and making sure that when you're dealing with these challenges, you're well protected and there's a strong ability to exit on your position there. Just as an example, we've looked at deals where for whatever reason, due to the current market situation, construction timeframes have blown out, and for say an apartment project, and they've hit the maturity date on their loan, and in addition to that, the incumbent financier just doesn't want to extend the facility, and so we've had to deep dive into the pre-sales on this apartment building, as so a lot of these pre-sale contracts have basically get out clauses and sunset dates in there that are close to expiry. So the ability for us to really dive deeper into the market, see that values since when these pre-sales have signed up have gone up significantly, and therefore the risk that you won't be able to extend these contracts is relatively low, and being able to flex on the terms to allow for on refinance a slightly lower level of pre-sales, and for them to hit milestones over time to get to the right risk position, that's been something we've been able to achieve.
Right, that's awesome, mate.